Hey.
Hey everyone, Ryan here, ryanbolton.com, local mortgage expert. I'm here to answer more questions that I found on Quora, also a couple questions that were put out by our company as we've run across different loan scenarios. They put them out about once a week, and it's got some pretty cool little scenarios. I thought that would be beneficial to have recorded and what the answers are. So let's start with one of those. So here's the question. My borrower inherited a property a while ago along with his siblings. They are all untitled with one another. The home is free and clear. My borrower would like to buy out the other siblings with a new mortgage. Would this be allowed as a non-cash out refi? So a little bit of a distinction. Whenever you pull out equity from a home, it's considered a cash out refi when it's ever more than about $2,000. So as soon as it's more than that in hand, now you can include the closing costs and certain things like that, but any debts being paid off, even a second mortgage, unless it was used to purchase the home, would then be classified as a cash out refi. So if the property's been inherited by, say, let's say in this scenario, there's 4 kids, but one kid wants to keep it, the other 3 just want to be cashed out their equity, you can actually do that as a non-cash out refi. Many people don't realize that. Why that's a benefit is the rates are better. Whenever you pull money out and have that designation of a cash out refi, the rates and terms are worse. So this is a way to get the cash to the other children without having to take the hit for the interest rate. Now, if the borrower gets any more than $2,000 back, then yes, it's a cash out refi. So, but he or she can pay off the other kids, the other brothers and sisters without it being classified as a cash out refi. That can be a huge distinction. Let's take a look at a couple other ones real quick here. I have a new borrower who is an attorney. She has been with her law firm for several years receiving W-2 income. She recently became a partner and now is receiving partner distributions. She is less than a 25% owner. However, she does get K-1 income. If I have a partner agreement detailing her equity in the partnership, am I able to use that income? The answer is typically you need 2 years whenever there's K-1 income. But in this scenario, they do allow the guaranteed payments from partner to be used as income. So that is one income source you can do it. Now, this can happen on a multiple different levels. It's not just attorneys, but there's people that go from W-2 to some sort of ownership in the company, and they get paid distributions, things like that. So there is guidelines that allows us to use that additional income, even if it hasn't been received for the last 2 years. Now, let's jump on Quora real quick and see if there's some good questions here. First one here is, how do I know if I have an FHA mortgage? So it is, all the guidelines are different. The forms you fill out are different. The appraisal you get is different. Really ask your loan officer if you really don't know as you're in the process. So I don't know if this is after closing or during the transaction. It just says, how do I know if I have an FHA mortgage? There will be a upfront mortgage insurance premium that is added to the loan. One trick is if you look at your loan amount, because it's a percentage of the loan, it's always kind of makes the loan amount a weird number. You know, it's not right at 350,000. It's like 354,110. You know, so it makes the loan amount kind of a different number. That's an easy trick to figure out if it's an FHA loan, if they're adding that upfront mortgage insurance premium and you're getting charged a monthly mortgage insurance premium. But if you look at through your loan papers and your loan documents, there'll be a bunch of times where it references FHA disclosures, FHA appraisal, different application forms. They add an addendum to the application. So there's ways to be able to know in the closing package. But if you haven't gotten to that stage yet, you should have a closing disclosure, a loan estimate that will break down whether it's an FHA loan or a conventional loan. So hopefully that'll help on what is an FHA. What if I know if it's an FHA loan? Let's see what else we got here. Let me hit the little more button here. Where is the best place to get a small house with a stand of trees near it? Find a small house with a stand of trees near it. I mean, that's where an agent might be able to help you, where some more tree areas are. Near a park might help, you know, if you're able to find parks. So some of these questions are just great. That's why I like having fun with them. So, okay. Where can I find a 10-unit apartment for sale? Whenever you have more than 4 units, even if it's a residential building, it's considered a commercial loan. So I would say most of the time, anything that's listed more than a fourplex will fall probably under a commercial real estate agent. So that's where you can maybe find some of those types of listings. I would say they're harder to find, harder to finance because there's just different financing options out there. But even though it's a residential building and residential people live in it, and it's not an industrial building or really a commercial building, because it's more than 4 units, it is classified as a commercial building. Let's see, what do we do here? What is the difference between a mortgage broker and a mortgage agent? So I would say a broker typically takes the loan and has a bunch of different relationships with other wholesale lenders that they actually know which lender will take which loan, and they will broker it to that loan, meaning that they don't close the loan in their name. They're not funding the loan with their underwriter. They're basically saying, okay, I know which lenders take that credit score, that property, or that issue, whatever it is. They know which lenders will take it. They pool those monies together, and they usually fund it through their channel. So usually a broker doesn't fund the loan in their name, where a mortgage banker or even a bank itself, they fund the loan in their name. Even if they sell it off or the servicing gets changed, it starts and finishes, at least till closing, in that company's name. So that's usually one of the differences. Now, mortgage agent, there's a lot of different terms out there: mortgage consultant, mortgage everything. But a mortgage agent is more likely just the loan officer, the person that's orchestrating that deal. We call them originators usually. It's usually called a mortgage loan originator. There might be other states that call it agent, but that's really the biggest difference between what is a mortgage broker and a mortgage like banker or other types of way to get the mortgage. It's really who's funding the loan at closing, whether it's being sent off for their underwriting, their guideline, all their stuff, or whether they're doing it in-house and then the loan gets sold or transferred. I would say mortgage brokers, they're also under different laws and restrictions on what they can charge, where the banking isn't quite the same problems that they have with it. And a lot of that came from the '08 crisis. They really started to reclassify what some of this stuff is and just rename it and come up with other numbers. Let's go through, what are we on time? Okay, let's do a couple more. Let's see. How can you tell if a house is bank owned? So usually with the bank owned properties, they have different listing agents. They'll have different notices that are on the windows to be able to know if it is that way. But you can check with the agent that's listing the property. If it's ever been bank owned in the past, you just have to check the chain of title. So you can check with the title company as you're putting an offer in and just see who's been the previous owners. If it was a bank owned property, at one point they're going to be listed as the owner of the property, whether it's HUD or whether it's Fannie Freddie or REO or somebody else that's listed on that. So, but if it's on the market currently, you'll have to check with the listing agent and see if it is bank owned. It's usually listed somewhere in the listing, but you also notice a lot of times it will have maybe some different stickers, some different things on the window that do show that it is in some stage of foreclosure or REO or something like that. Let's see. Where would I start the process of purchasing a home through a private mortgage lender? Would I start with an attorney, broker, or private mortgage insurance or private mortgage company? So where would you start the process? You find out who the owner is. The private mortgage lender may not be the owner. If they are, they'll be also the owner of the property. But lenders are just liens on the property. They're not typically the owner of the property unless they have gone through some sort of foreclosure situation. So there is public record on who's the lien holder on the property, maybe not the terms, obviously, of the loan, but you'll be able to find out who the owner currently is. Then you just have to track them down either through Facebook or other means to be able to track it down. But as far as putting an offer in, you can still use a real estate agent. There is some attorney states where you can do that, but generally you can get a real estate agent involved to create a contract to submit to that seller. So it isn't different. It may be an extra step or two, but it's the same process you would of any other home that's on the market. You put a contract together, you submit it to the owner, and see if they're willing to sell for the price that you're willing to pay. Let's see. And I haven't pre-screened any of these, so this is kind of live. I mean, it's going to be recorded, and then I'll post it, but I'm just trying to go down through this and just off the cuff, just going with whatever we got here. So let's see what we got next. What if I get a mortgage that I don't intend on paying off all the way, but rather just live at the house for a few years, then give the house and mortgage to someone else, but agree that then they sell it and I get a percentage? Okay, there's a lot going on there. So when you do the loan on the property and then you transfer the ownership of that property, then the note can be called due because that's the collateral. If you've moved out of it, they can call the note due. Now you can still turn it into a rental property, things of that nature, but it is something where you can't just live in it and then sell the house and the mortgage to the next person without there being an assumable loan. Now, FHA loans are assumable, so the person that's buying the house can assume it, but it doesn't necessarily pay you out the equity portion. You have to come up with a separate agreement or something like that. So a lot of times that'll happen when the values are basically the same, or it's just a family member or something that's just assuming the payment. But it really is something where you're better off just to sell it completely. I think this question is probably stemming from the fact that interest rates are so much lower now than they were back then than they are now. So maybe one of the benefits is trying to sell your mortgage with the property. But there really isn't a way to do that unless the loan is assumable. And the only loans that are assumable are FHA loans. So it isn't something where, you can just buy it now, spend a couple of years, then sell your property and your mortgage with the property, and then get your equity later on. It's just a situation where you're just selling it outright at that particular point. All right, let's see how we doing on time. Let's maybe find one more good one here. Let's see. Okay, this is an easy one. Would an attached deck and stairs add overall value to the home than a more enclosed one? Would an attached deck with stairs add more overall value to a home than more enclosed one? So yes, that can, but we've talked about this a little bit on the channel. Not dollar for dollar improves your value of your home. So if you put say a $10,000 deck on the home, it doesn't automatically make it worth $10,000. It does maybe add some marketability. Maybe it makes your home stand out a little bit more, but generally things like that really don't give you dollar for dollar, especially right away. Maybe over time it would, but really those are things that just make it more marketable, more sellable. Maybe somebody would want it, and maybe somebody doesn't want a big deck like that and wouldn't spend the money on it, so they don't really see any value added to it. So square footage and upgrades to like kitchens and baths usually give you a better dollar for dollar value transfer, but just adding a big long deck to it really is more of a customized feature that some buyers are going to want, some aren't. Some are going to want it one way, some are going to want it another way. I think generally speaking, having a nice deck in the back is more of an added bonus. I think most people would want something like that, but most of the time it's not going to be $10,000 value the day you put that deck up. It's usually going to maybe add a little bit of value, but not enough to the cost. It's really just making the home more livable, more enjoyable, you using it, that type of thing. Let's see what else we got. Let's do one more. Okay, let's see. I got to open the whole thing. It's a little longer again. Let's just open it. Okay, this one is, how much money should I have saved before buying my first home? What are some ways to save money faster and efficiently without sacrificing too many things in life? Great question. So there is plenty of programs that don't require as much money down, even 100% financing out there. And generally speaking, I think it's better to take the savings and pay off other debts with it and go with some of these 100% financings or 3% down or 3.5% down, because generally taking 10 grand on a mortgage isn't going to save that much versus 10 grand paying off other debts. So it is something where part of my job is to evaluate what is the best combination of loan and options that are available for a particular client. And it's good to still save. So, I mean, the second part of this question we'll get to in a second, but really it's one of those things where, what are your other debts? If you have a car balance that's like 8 grand and costing you $300 a month, well, 8 grand on a mortgage isn't going to save you $300 a month. So taking the money and getting rid of that can actually free up your budget more. And I think it's important to not just have all the money go into down payment. You want to have some money left over for moving expenses, or generally when you're going from renting to owning, you might be going to a bigger home. Maybe you need to upgrade some furniture. Maybe you need a washer and dryer that you didn't need before. Maybe you need other stuff that you're going to want to have in the home because maybe you have a little bigger home too. So having some money for reserve is helpful. And then just having savings. You've got to have a couple months in the bank in case you lose your job or something like that. So putting 5 grand down on the home to save $20 a month versus having 5 grand in savings for emergency, for accidents, for medical, for any of the stuff that happens, you're far better to have that money in the bank than just putting it down towards the mortgage when it really won't save you that much more. So it's still important to save. It's still important to have those savings, but I'm a big believer in taking the loan a little bit higher and get rid of other things or keep that money in savings. Now, the other thing is, what are some of the ways to save money faster and efficiently without sacrificing too many things in life? There's always a balancing act. I have found in my life, the more I've minimized, the more I've separated needs and wants, the more I've given myself time on a purchase, the better I've always been. I've really gone on a renaissance of minimalists. I've really gone through and tried to get a little more use out of everything I have and just see where all my money is going. I think tracking, just like whether it's diet, whether it's money, whether it's anything, knowing where your money is going is a crucial part in finding ways to save additional money. So that's really where I would say sacrificing too many things in life, like this is saying here. I'm amazed at how many times all the marketing that's done out there is all designed to take your money, and they're very good at it. The lighting, the camera, everything on these commercials is designed to be this big lifestyle change if you buy this thing or eat this food or do whatever you do. If you just give yourself a little buffer between you and your money and you give yourself a little bit of time, most of the time you won't make those purchases anyway. Stick with what you got a little bit longer. Repurpose it if you need to, and just give yourself a little time before you make that purchase. You'll find savings will pop up further and further. So I hope this video was helpful. I have a lot of fun doing these videos. I'll do a couple more here shortly. But if you have any comments, if you have any questions, if you have any scenarios you want to run by me, I'd love to do a video that is just dedicated to viewer comments and things like that. So if you ever need a mortgage loan, I'm licensed in Utah and Nevada. You can go to my website at ryanbolton.com. You can start your application or just schedule an appointment over the phone to talk with me about options, about the area, about financing, all those things. So we also have a podcast. You'll see that on the playlist here on my website and on the YouTube channel called Clear to Close, where we dive a little deeper into some of these issues. But love an opportunity to work with you if you ever need a loan. And please post, share, and comment if you have anything else that you would like us to talk about. And appreciate your time and hope you enjoyed listening.